Hey guys, welcome back to my channel. So I was going to make a video today about my first house I ever bought, but then something happened. So the whole video just changed in my mind this morning. So today I'm going to tell you what happened today. I woke up to this email from my Schwab account. So basically, I'm going to tell you what happened with my options and what happened with my stocks and my dividends and things. So basically, what I was doing to make just a little bit of extra money, I was basically using options. Now, I used to mess around with options years and years and years ago. In fact, the biggest win I ever had with anything was an option. And back then I was buying call options, and it was the day before Google came out with their earnings report. And so I bought an option, I don't remember what I did. I spent about $1,000 on Google options. And then they came out with their earnings report, and overnight, that option went from 1,000 to 13,000. I sold it the next morning, cleared $12,000. So options were very alluring, and they drew me in. And then what happened was I kept investing, and I took that 12,000 and I was investing into other options, and they didn't work out so well. And what I learned very quick was options, you can win big, but you can also go all the way down to zero very quickly. So I stayed away from options for a long time, and then I recently started getting back into options, but I was doing what's called covered calls mostly. Now what that is now instead of buying options, I'm selling options. Okay, so I'm selling someone else the option to buy my stocks, 100 shares, one contract is 100 shares of my stocks, okay, at a certain price at a certain day. Also, what I started doing was I started selling puts. Puts are me saying, I will buy your stocks at a certain price at a certain day, 100 shares of that. If I sell a put on a stock that's currently at $30, and I sell it for a month away at $29, and the stock goes up, I get the money that someone paid me for that put option, and that's it. And their option goes to zero, not mine. Also, if I do a covered call, which is the opposite, I'm betting it goes up. And if I say, hey, I'll sell the stock I have, which is now 25, I'll sell it at 27 in a month. Somebody gives me money for that option, and if the stock is at 26 when that date comes, nothing happens. I keep the money and we move on. However, if that option goes up above 27, let's say it goes to 30, I have to sell my stock at 27 and I take a $3 potential loss, opportunity cost loss, not real loss. With the puts, however, let's say I say I'll buy your stock at 29, it's at 30, I'll buy it at 29 in a month, and it goes down to 10. Well, now I'm having to buy 100 shares of this stock at $29 and it's worth 10. So with the selling the puts, you can lose a lot more. Covered calls, you lose potential earnings or opportunities that you missed out on, but you're still gaining because you're selling at a price that you agreed on. With the puts, however, it's a little riskier. And I've been making, $100 here, $100 there, doing stuff with the puts and the calls. And today it kind of came back and bit me in the butt. So I think I'm going to stay away from selling puts for a while, at least for the most part, unless it's smaller amounts. So what I put in there was, I sold a put for the ETF XLE, okay, which is an energy ETF. And so what ETF is an electronically traded fund. So this is a fund that holds in mostly, things like ExxonMobil, Chevron, these things. So it's a good dividend paying ETF. However, this sector, the energy sector, has been beat down. And so these prices are really low. Now that's for a number of reasons. One, with the pandemic, the demand for gasoline has plummeted. So with the price of crude dropping, that's caused pressure on these cost companies because they're losing money because nobody's driving right now. Also, with these EV futures, right? Tesla going crazy and battery breakthroughs and all these things, and California passing a law saying that by 2035, they're outlawing the new sale of gasoline-powered vehicles, and they want to replace them all with electric vehicles, right? So there's just this thought of, are the gas companies, which have been around forever and been great dividend-paying companies, are they coming to an end? And I've been thinking about, I have some small positions in BP and in ExxonMobil, and I've been thinking about, maybe I should get out of those, but I'm way down on them. I've lost, a few hundred on each stock holding. And so I'm just going to wait it out and collect the dividends. And my thought was, as we come out of this COVID disaster, as we come out of this pandemic and we get a vaccine and everything starts to recover, those are the one set of recovery stocks that have yet to turn around. So they're actually a really good buy right now in some ways. Also, 2035 is 15 years away. Gasoline powered, gas companies, oil companies, they're not going away anytime soon. They may be losing their influence, they may be going out of style eventually, but they are not dying. And so there's a potential play here of getting these things cheap, collecting the dividends over time, and still maintaining your money. Just keeping an eye on, the EV market and making sure that you're not the last man holding the bag kind of thing. Well, I was interested in this XLE ETF, but I decided I would sell a put for a price that I would, like to buy it at. I think it was selling for around 36 or something, so I put in for a $35, what's called a strike price, saying I'll buy 100 shares of these at $35. Well, that contract expired today, and the stock is at about $30. So Schwab automatically purchased 100 shares of XLE at $35, and it's worth $30. So I immediately took a loss of $500. Now, it's not a true loss because when I sold the put, I made $120, and then I went around, I turned around and immediately sold a covered call on these 100 shares and made about another $120. So I lost maybe $270, $280, but the idea was I didn't have the funds, and so these stocks were bought on margin, which I don't use. And I don't have $3,500 liquid at the moment, so I was able to cover a portion of that. But hopefully tomorrow, when I get some of my rental income, I'll be able to cover the rest of it. But I'm not budgeting $3,500 a month, and I had already bought some stock this month, so it kind of caught me off guard. I'll be able to swing it. Hopefully I won't owe any interest in margin interest on this money that I'm borrowing, because I think it takes 2 days to settle, and I think I'll be able to get all the money in there before it settles, and therefore avoid any interest. It's kind of like you get about 48 hours, definitely 24, but about 48 hours to get the money in there kind of thing. So yeah, I should be able to do that, and it's just going to slow me down a month in regards to building up my reserves for my rentals. But that brings up my monthly dividend income to about $279, okay? It'll be really fun when I hit the 333 mark, because then I went from a quarter to a third. Obviously 500 will be really momentous, but that's going to be a while. So anyways, that's what I woke up to, is my options came back, and I lost on this one. If you add up all my covered calls and all my put options that I've sold, I've made more than what I just lost in this sale, but it definitely took a hit. Also, what are your thoughts on the energy sector of dividend stocks and stocks in general? Where do you think they're going to be going? Comment below, let me know your thoughts, because it's kind of a hard one to figure out. In one sense, they're a great buy. In another sense, they could be a dying sector. So let me know what you think, and follow along with my journey here. Please subscribe to my channel. That would be great, and share it with your friends. And as all the people say, smash that like button. Thanks.